Did you know that millions of Americans are leaving money on the table every single month, not because they don't deserve it, but simply because nobody told them the rules had changed? If you're receiving Social Security benefits, or you're about to, April 2026 brings some genuinely important updates that could affect exactly how much lands in your bank account. So settle in, friend, because what you're about to hear could make a real difference in your everyday life. Now, before we dive into the specifics, let's take a moment to appreciate something. You've worked hard, likely for decades, and Social Security is not a handout. It is money you earned, contribution by contribution, paycheck by paycheck. So understanding exactly when it arrives and how much you're truly getting isn't just smart financial planning. It's your right. And that's exactly why we're here today, breaking it all down in plain, honest language. No confusing government jargon, no fine print tricks. Let's start with the April 2026 payment schedule, because knowing your payment date is the very foundation of planning your monthly budget wisely. The Social Security Administration distributes payments based on either your birth date or the type of benefit you receive, and getting this straight can save you from unnecessary worry when you're watching your bank account. If you receive Supplemental Security Income, what most people call SSI, your April payment arrived on Tuesday, April 1st. That's the first day of the month, right on time, just as it typically goes for SSI recipients. Now, there's also a special group worth mentioning, folks who have been receiving their Social Security benefits since before May 1997, or those who receive both Social Security and SSI at the same time. Those payments went out on Friday, April 3rd. If that describes you, you're likely already very familiar with that Friday deposit tradition, and you probably had your calendar marked well in advance. For everyone else, the majority of retired workers and their families, your payment date is tied directly to the day of the month you were born. Think of it as Social Security's way of spreading payments evenly across the month so the system doesn't process millions of transactions all at once. If your birthday falls between the 1st and the 10th of any month, your April check arrived on Wednesday, April 8th. If your birthday falls between the 11th and the 20th, you received your payment on Wednesday, April 15th. And if you were born between the 21st and the 31st, Wednesday, April 22nd was your payment day. 3 Wednesdays, neatly spaced out, and if you can remember which group you fall into, you'll never spend a nervous morning wondering where your money is. Now here's where things get genuinely interesting, and where a lot of people feel a mix of excitement and, honestly, a little disappointment. You may have heard that 2026 brought a 2.8% cost of living adjustment, commonly known as COLA. And yes, that increase is real, and yes, it does mean more money in your benefit. The average retired worker's monthly check this year is approximately $2,071, that's roughly $56 more per month than it was in 2025. Over the course of a year, that adds up to nearly $672 in additional income. Not life-changing on its own, but meaningful, especially when groceries, utilities, and everyday costs keep nudging upward. But here's the part that the headlines don't always mention loudly enough, and this is where your trusted friend, that's me, needs to be completely straight with you. That COLA increase doesn't arrive in your account untouched. For most Medicare-enrolled retirees, Medicare Part B premiums are automatically deducted directly from your Social Security benefit before it ever reaches your bank. And in 2026, those Part B premiums rose to $202.90 per month. That's an increase from last year, and it quietly chips away at that COLA boost you were counting on. So while your gross benefit went up by roughly $56, a portion of that gain is effectively absorbed by the higher Medicare premium. It doesn't erase the increase entirely, but it does mean your real take-home bump is somewhat smaller than the headline number suggests. Understanding this is not cause for despair, it's cause for awareness. Because when you know what's actually happening, you can plan around it. You can adjust, ask questions, and make decisions from a position of knowledge rather than confusion. Speaking of knowledge, let's talk about something that could genuinely put more money back in your pocket, especially if you're 65 or older. Under legislation known as the One Big Beautiful Bill Act, qualifying seniors may now claim a temporary $6,000 federal tax deduction. For married couples, that figure doubles to $12,000. This deduction applies to your federal taxes, which means it could meaningfully reduce the amount of tax you owe on your Social Security income. Now, tax situations are personal and vary widely, so it's always wise to speak with a tax professional or use a trusted tax filing service to see exactly how this applies to your specific circumstances. But if you haven't heard about this deduction yet, this might be one of the most valuable things you learn today. And there's more for those of you who are still working while collecting Social Security benefits, perhaps part-time, perhaps as a way to stay active and engaged, or simply because every little bit helps. In 2026, the earnings test limit has been adjusted. If you haven't yet reached your full retirement age, you can now earn up to $24,480 per year from work without affecting your Social Security payments. Beyond that threshold, $1 in benefits is withheld for every $2 you earn over the limit. That's not a punishment, it's a temporary adjustment, and those withheld amounts are actually factored back into your benefit once you hit full retirement age. Still, knowing that $24,480 ceiling gives you a clear boundary to plan around. Now, for those who are still in the workforce and paying into the system, perhaps a younger spouse, an adult child, or even yourself if you're continuing to work, the taxable wage cap for Social Security contributions in 2026 has risen to $184,500. That means earnings up to that amount are subject to the Social Security payroll tax. It's a detail that matters more to higher earners, but it's worth knowing as part of the bigger picture of how the system is funded and sustained for future generations. And let's take a moment to acknowledge the high end of the benefit spectrum, because it tells an important story about strategy and patience. If you delayed claiming your Social Security benefits all the way until age 70, which takes real discipline and financial planning, the maximum monthly benefit you can receive in 2026 is $5,181. That's a substantial sum, and it reflects years of higher earnings combined with the delayed retirement credits that Social Security rewards you with for every month you wait past your full retirement age. Not everyone can afford to wait, and that's completely understandable. But if you're approaching retirement age and wondering whether to claim now or hold on a little longer, that maximum figure is a compelling reminder that patience, when possible, genuinely pays. April 2026 is, in many ways, a snapshot of the ongoing balancing act that Social Security represents: increases designed to help you keep up with rising costs, adjustments that quietly reduce the net effect, and new legislative changes that offer real opportunities for those who know where to look. The system is complex, no question about it. But complexity doesn't have to mean confusion, not when you have the right information and someone breaking it down clearly and honestly for you. As we head into the final part of today's video, we're going to bring all of this together, wrapping up the key takeaways, making sure you leave here feeling informed, confident, and genuinely ready to make the most of what April 2026 has to offer you.